GRUB stock, justeattakeaway.com. So this stock closed the session of the 28th of July 2021 at $17.60, a slight extension of about 0.57%. 2.1 million shares crossed the tape during that session, and we have a 52-week range of between $15.50 and $36. And what's more, this stock has just completed its merger with Grubhub, hence probably the reason why we have this ticker GRUB, amongst other things. So this is probably the largest takeaway platform in the world. I believe it's probably one of the largest. And what's more is that indeed it is a negative 48.57% off its 52-week high of probably $26, and 11.43% above its 52-week low of $15.5. So I think I got that wrong. It's probably up. It's off close to 50. Okay, close to 52% off its 52-week high of $36. So I have to just correct what I just said earlier on. So what's more, this stock came to our attention because one of our viewers wanted to know more about the stock, whether it's a buy or not. So there's some piece written out here on Motley Fool. It says over the first half of 2021, combined orders were up 51%, and though it's reporting unspecified adjusted EBITDA losses for the period, so and though it's reporting unspecified adjusted losses, as earnings before interest and all that stuff, EBITDA losses for the period, so there were some losses unspecified. So it believes they have peaked. So the company believes these losses have peaked. Okay, they were caused by caps on fees delivery companies in the US could charge, and management now believes adjusted EBITDA margins will improve going forward. So there's even more here we didn't even read. It says, okay, obviously they've completed their merger with Grubhub, and it noted that combined global orders grew by 37% in the second quarter, 47% coming from outside the US and 40% from within the US. So technically, what do we have below here? You can see the stock is just trading slightly above all of its short-term moving averages. So, and I think down here we can see some of the escalators. They're trying to improve, even though many of them are still underwater. And the 14-period slow stochastic oscillator is also improving as well. MACD is definitely above the signal line. Things are improving. We have the RSI at 52.40. It appears to be rallying within a longer term bearish trend. So yes, indeed, yes, the longer term trend is a bearish one. You can see if the 200-day moving average is any signal, it is bearish. You can see this yellow curve here, it's very much bearish. All the moving averages are very much bearish, even though the stock is rallying. So amongst other things, it's an improving signal. So moving down, we can see it also says yes, it's rallying within a longer term bearish trend, driving its MACD above the signal line. However, the shares remain below a declining 200-day moving average, signifying that the dominant trend remains lower. Easily, it's underperforming the S&P 500. Momentum is strongly bullish. Okay, so things are improving. Investors are paying high prices for shares. The volume for the last trading session was heavier than usual. About 2.114 million shares across the tape, against an average of 663,711 shares per day over the last 12 months. The unbalanced volume indicator shows that longer term selling pressure has given way to near term accumulation by traders, and the volatility is not that high. What does it say here? presently wider than usual. Okay, even though don't have a very high figure of 40.22%. By some standards, that is still high. This is a yes, it's a major stock. I heard in the UK they are trying to put it out from the FTSE index, but even at that, it's still a major. It's a very important stock. So I think the signals are gradually improving. You know, and the fundamentals are also improving. But I know you may also wonder why is it underperforming when we had a period, a COVID period, a lockdown period. It should be doing well and all that stuff. But and the COVID period was mostly in 2020. So we had a mix of things in 2021. But all in all, you should expect the stock to be doing well financially. But I think investors invested a lot in the stock, so it will take some time for it to do well. So I'm not trying to defend it, but all in all, I think the signals are improving by a lot of by a lot of standards. For many market participants and analysts, it's a buy. They will definitely recommend that you buy the stock. The signals are improving. It has reached this low of this bottom of 15.63. That was as at maybe a week ago or thereabout, and has started to extend now and has continued to do so over some sessions. So it's rallying now. The signals are improving. If you wanted to take heart, if that gives you confidence, by all means, I would just say it's a cautious buy. It still has resistances. It has to surpass. This resistances at $17.90 and $18.70 and $19. These are some of the resistances it has to surpass. These are some of the points it never succeeded in surpassing over the last couple of weeks. Over the last 2 months, it has not been able to go beyond some of these levels. So all in all, like I said, it's a cautious buy. This is simply because it has increased by probably over close to 20%, or let's put it at close to 10% since the 20th of July, or at least more than 10%. So that's why it's just a cautious buy, because there's every chance that it will retrace again and consolidate and all that stuff. So, but I think, just as we indicated, it's a cautious buy, and if you want to buy it, by all means buy it, and don't put a lot of money, and see how things go from there. Okay, thank you very much for watching this video.